I'm curious if you expect tech to continue to outperform as we continue on in 2023. What are your thoughts?
We do. We think this is going to be a great year for tech. We think the setup kind of entering the year was pretty good. I mean, at the end of the day here, the reason we do like there's actually a number of factors out there. I'd say first off, in terms of the setup and how the year is going, I think you've got a profit recession that really started in some instances early last year in terms of some of the comm services type names, some of the larger big tech names like an Alphabet and a Meta, but also kind of, as you kind of went into mid-year into the second half of last year, semi stocks started rolling over in terms of some of the fundamentals out there, as well as the Apples and Microsofts of the world. You kind of started seeing headwinds out there. And as you kind of go into the first half of this year, we actually think you're looking at likely margin trough here in Q1, Q2. And really out there, what you've got here is a lot of those big tech names out there essentially giving investors what they want in terms of cost cuts out there.
And what are your expectations for earnings?
I mean, overall, again, I think our view here is in terms of the earnings picture, we do think, some of the more kind of ad-driven type names out there, again, the Alphabets and the Metas of the world, we think you kind of see a bottoming in terms of earnings and margins here in Q1 with improvements steadily throughout the remainder of this year. In terms of, some of the bigger tech names out there, specifically Apple as well as Microsoft, we're pretty kind of optimistic on those names. And again, the setup looks extremely bullish to us in the sense that you've got a more favorable Forex comp trend here as you kind of go into Q2, Q3, and Q4 of this year. And you've also got an environment, specifically in the likes of Apple, where you're going to be lapping some of the supply constraints that they witnessed last year. So you're going to see, we think, at the end of the day, accelerating growth from a lot of these big tech names. And also on the semiconductor side of things, I think that can't be ignored because semiconductor stocks oftentimes are kind of viewed as a leading indicator for a lot of other areas of tech. And we do think, again, kind of you've got this bottom here in Q1 where you'll likely see a springboard here into the second half of the year.
Are you in the camp as some are, maybe not most, who think that maybe as we get to Labor Day, depending on what the Fed does, we could be back into potential IPO chatter territory? Is that something that's even on your radar? Of course, interest rates and the federal funds rate, pretty important part of that conversation. But are we looking at a potential resurrection of the IPO world even this year or no?
Yeah, listen, I wouldn't say I'm necessarily in that camp, but I would say this. I mean, and you kind of need a lot of things to really work itself out for you to kind of get a more favorable outlook out there. But I do think you kind of need the Fed to really kind of come to a halt in terms of Fed rate hikes and potentially even start cutting in order for that environment to get a little bit more attractive. And the reason I say that is you just haven't seen the type of valuations from a lot of the smaller players out there in the tech landscape, some of the more profitless type of publicly traded companies out there really start seeing their valuations improve. A lot of this recovery has really kind of hinged itself on some of these big tech names as well as the semiconductor stocks, which are wildly profitable in nature during upturns. So until we start seeing kind of some of the other kind of more speculative type of names within the public markets start catching a bid and improving valuations out there, I think we're going to be hard pressed to really see much improvement in the IPO market. And I probably don't think you see that until 2024 at the earliest.